China's central bank has again cut the guiding rate for the national currency, the yuan, a day after Tuesday's record 1.9% devaluation. The move sent fresh shockwaves through Asian markets, but the bank has sought to calm fears, saying it was not the start of a sustained depreciation. The yuan fell another 1% on Wednesday, marking the biggest two-day lowering of its rate against the dollar in more than 2 decades. Figures released at the weekend showed Chinese exports fell more than 8% in July, adding to concerns the world's second-largest economy is heading for a slowdown. There were further signs of weakness on Wednesday, when figures showed industrial production in July rose 6% from the previous year. The rise was smaller than expected and was also below the 6.8% increase seen in June. Fixed asset investment, a measure of state spending on infrastructure, expanded 11.2% for the first half of the year, also below estimates and at its lowest since December 2000. On Wednesday, China's central bank fixed the official midpoint for the yuan down 1.6% to 6.3306 against the dollar. The midpoint is a guiding rate, from which trade can rise or fall 2% during the day. Until Tuesday, that rate had been determined solely by the People's Bank of China, PBOC, itself, but the rate will now be based on overnight global market developments and how the currency finished the previous trading day. The bank, which had called Tuesday's 1.9% cut a one-off adjustment, sought to reassure financial markets on Wednesday. Looking at the international and domestic economic situation, currently there is no basis for a sustained depreciation trend for the yuan, it said in a statement.